Welcome back to the channel, guys. So in previous videos, we've established that a company can issue bonds or acquire debt in order to finance their operations, or they can issue stock or equity in order to finance their operations. So what happens when a company goes bankrupt is going to be the topic of this video. And we've also established that bonds are less risky than stocks, right? So what happens when a company goes bankrupt? Let's hypothetically say that Walmart went out of business. What would happen to their shareholders and what would happen to the bondholders? So when it comes to the company going out of business, they end up selling everything they have. All the offices, chairs, warehouses, trucks, everything gets sold and turned into cash. The first people to get paid from this pile of cash are going to be the lenders and the big banks who loan the money to the company. And bondholders who are owed principal and interest. So if you had Walmart bonds, you in the line to get paid back, you would be in front of the stockholders. Then once all the lenders get paid, if there's still any money left over from that, then that's when the holders of the stock are going to get paid. And the first stockholders to get paid are going to be the preferred stockholders. Preferred stock is a class of stock that ranks above common stock, which is what I discussed in my stock video series. Go to that playlist if you want to learn more about that. So preferred stockholders get paid before common stockholders, but after any bondholders. As an FYI, preferred stock also entitles you to a higher dividend than common stock dividends. After preferred shareholders have been paid, and if there's any money left over, then common stockholders will get paid. Most of the time, common stockholders don't get paid when a company goes out of business. Your share price just goes to zero. Or you may get cash or stock if another company buys your stock. When I worked at TD Ameritrade and they were purchased by the Charles Schwab Corporation, my common stock shares didn't go to zero. So what happened was Charles Schwab ended up trading out the TD Ameritrade shares and giving us all the Charles Schwab shares. So even though TD Ameritrade was technically going out of business, their share price didn't go to zero. We just got swapped the stock. A lot of times when a company's going through bankruptcy, their ticker symbol will acquire a Q at the end of it. So for example, if Walmart were to go bankrupt, their symbol would turn into WMTQ to notify that they're going through a bankruptcy. So if you're buying a stock, you see a symbol of something, something, something Q at the end, double check that it's not going through a bankruptcy right now. So basically, that's a quick overview of what happens when you own stocks and bonds and the companies that issue them go out of business. In the next video, we're going to discuss an investment that is a lot more short-term and less volatile than stocks and bonds. And it's a good idea for where to park your cash when you're not getting any interest from it. So make sure you check out those videos next.